I'm up next, and what I'm going to talk about is Confessions of a HMRC Gamekeeper. And the reason I'm going to mention this is we've actually just employed, within Robson Laidler, a chap who, until a week ago Friday, was an inspector of taxes at HMRC. Yeah. And that's what I still say to him in the office when I see him. I still boo him and hiss. It's like a natural instinct, you know. So yeah, I'm going to just take you through some of the things. I was going to talk about MTD, which is Making Tax Digital, which is quarterly reporting of rents. That's still coming. If you haven't got records digitally, you need digital records because you're going to have to use them to submit your figures quarterly within about 2 years. That probably fills you with dread if you're not already doing that. Some people I've already spoke to the night. We've got a lot of work to get anywhere near that, not looking anywhere in particular towards one side of the room. But any aspiring TikTokers out there will know all about algorithms. You got to get the algorithm right to get the views, get your reels viral. HMRC use an algorithm to actually work out whether you're worthy of investigation. They call them inquiries these days, but investigations is what we all still call them. And they use a system internally called ICE. I can't remember what it stands for, but it's ICE is their internal system. And what they basically do is they pull together a whole load of information that is available to them about a taxpayer anytime they look at someone. Now, the first thing to bear in mind here is that probably 90% of tax returns don't even raise any kind of ripple at all when they get submitted to the revenue, which might disappoint you because you worry about it, you dread what's going in, you stress over it. If you're one of those people, you've probably got nothing to worry about because your figures will look okay. When you send your information in, 90% don't even cause a stir, 10% get thrown up to the top of the pile, and they are then reviewed in some way. Of that 10%, again, 9 out of 10 are dismissed because there was enough information there, there was an explanation as to what happened, why it looked unusual, it stacks up, they throw them away, which means you get about 1% of tax returns get an inquiry from HMRC on an annual basis. A lot of these now are just very simple letters. You know, we think you had a car benefit from your employer, you didn't put it on your return, can you put it on your return? So a lot of them are straightforward, but every now and again it gets a little bit interesting. So what kind of information is in ICE? Well, bank information. If you've got bank interest on a bank account, that's on a list. So they pull you up on their system. There's a massive spreadsheet full of all kinds of data. On there is any bank accounts you have that pay interest. So any deposit interest you get, it's on the list. Investments are on there, stocks and shares information. If you've got, you've still got your old carpetbagging days of, when the banks were all, the build societies were all floating and that kind of stuff. All of that's still on there. Any portfolios where, you've got a Hargreaves Lansdowne portfolio, again, it's all on there. It's all reported to HMRC, turns up on this list. It's quite simple for them just to match that against what you've submitted, and if it looks like it doesn't remotely tie in, they'll ask you about it. One way you can prevent that is to send in with your return a list of the stuff that you have put on. So if they think you've got a Barclays account and they can see it actually says Barclays, they know it's on there. Of course, the normal default is you can't actually submit that kind of information to HMRC. They just ask for figures. And even then, they just ask for the totals. They just want all of your bank interest in one box, as an example. You can submit additional info if you want, and it does help because when it comes out the pile, they look at it, match it off, put it aside. You've dodged a bullet. So we know bank interest and investment income is taxable. Might surprise you that ISAs are on there. Why do they want to know about ISAs? These are tax-free. There's no capital gains tax. There's no income tax on ISAs. But if you're sitting on a couple of £1 million worth of ISAs that you've been topping in at the maximum level for, since they came out, they might want to know where that income came from or where the capital came from. So they use that as a gauge to see what your worth is, as well as all the other information they've got. And if it doesn't stack up from the income you've got, they'll ask you where it came from. So even though it's not taxable, they still look at it. It's still part of the overall picture. Tenancy deposit scheme. It's basically run by the government, isn't it? Or it's a government quango or whatever you want to call it. Or it's government introduced. It's legislated for. They know which deposits you've protected, when they were protected, what the levels were. So if you've got some fairly hefty deposits getting protected and you haven't got rents on your return that look like they match up, again, that's something that would trigger. You also get information about pension contributions. I can't spell it, I just couldn't fit it on. So pension contributions, again, you might put a hefty payment into a pension contribution. When you send that check off to Aviva, because you get tax relief on pension contributions, the tax relief you get on the contribution is reported. If it doesn't tie in with your return, that's another thing they'll spot. It would make sense that if you're getting housing benefit paid in with a universal credit within the universal credit system, or you get an old school housing benefit, again, your name is on a list. If you've got 30 properties, so with Gateshead Council, and you're putting 10 grand a year rent on, that's an easy one, they'll catch that all day long. Might surprise you though that things like grants, so again, local authorities and people who offer grants to get homes back into use, all that kind of stuff, that all gets reported. Again, less surprising is land registry and SDLT. They will literally have a list of all of your stuff on there where your name is attached to a property. So there's actually quite something topical going on at the moment, and people smarter than me will know this, but there's legislation going through to allow, I suppose, the public bodies to check the direct ownership of companies so they can track down who the eventual owner of these things are. Again, that's going to flush a lot of stuff onto HMRC's system where they'll say, oh, we didn't know they had that then. They also use Equifax. They'll look to make sure your addresses tie in, which credit cards you've got, whether, again, the payments and the credit limits on these cards tie in with someone who's declaring the income you've got. They'll also look at cars registered to your address or with you as the registered keeper. Apparently they have a field day with this when every now and again they get a list where someone's had about 60 cars in a year. It's probably one of those car dealers that leave, when you, like, as soon as you get out of the city, you see cars lined up on the side of the roads, don't you, everywhere? It's probably those guys. You might not know this as well, but letting agents are asked every now and again. Letting agents get a letter. Can you tell us the landlords you act for, please, and which properties you manage? Again, that all goes into the system. And grants is so good, I've mentioned it twice. I don't know why that's in there, other than I was doing my slides at 10 to 5. Council tax as well. Now, this isn't on the list, but my man on the inside informs me it's very straightforward. You get in touch with the council and say, does this person turn up on your lists anywhere? If so, which properties have you got them connected to? And again, that's nice, easy information for them. Business rates, you might not care about this, but if you're now going down the Airbnb route, the short-term holiday let, one of the things you're probably trying to do is get out of paying council tax because it's a small business. You probably qualify for the small business rates. You've got to register to qualify for the 100% small business rates. Again, your name's on a list. And again, I've already said that, haven't I? Two quite important ones, though, is people kind of go, but I'm not doing anything, I'm clever, I've got this down. Suspicious activity reports are made by professionals. There's a couple of solicitors in the room who know about this. You report things because we have to. I'm pretty sure years ago there was a case where a solicitor got struck off because they knew a client had bought something with 50 grand cash that you wouldn't normally buy with 50 grand cash. They didn't report it, so they got punished once it all unravelled. So you got to be careful on this. And of course, snitches. Snitches get stitches and all that, but if they've snitched on you, it's very hard to get out of this. We had a great, we had an inquiry that ran on for about 3 years, and we're pretty sure at the end it was the wife of the taxpayer that had snitched on him, because it turns out he was busy supporting his ex-wife in an overseas property, and she just found out not long before the inquiry started. So yeah, that was an interesting one. But you're all honest people, you're all declaring everything, that none of that was an issue. Just thought it was quite interesting. What are the common errors? Now, this is where you can easily get it wrong, even if you're trying your best. I've mentioned in the past something called the Property Rental Toolkit. It's a great resource. If you haven't looked at it, jump onto HMRC's website, just type in Property Rental Toolkit. It's got 20 to 30 questions, which will just one by one go through and say, these are all the things you keep getting wrong, and why you get them wrong, so please don't keep getting them wrong. It's definitely worth a look. The key things that people do, and I literally couldn't believe some of these things, but any expense you pay is either to do with the capital of the property, getting the property, extending the property. Those types of costs can't be offset against the rental income. Most people know that. But again, our new guy, Trevor, said he found some landlords were trying to claim the entire purchase of a property against the rental income, which you just can't do. Yeah, Chris is laughing because it's like, it is baffling. But anyway, so people try stuff like that. But on a smaller basis, a lot of things like legal fees and things like that, if you're extending, if you're extending the lease on the leasehold on the property, the fees associated with that, plus the cost of that, is not a revenue deduction. It's part of getting the property, part of the purchase of the property. You can't offset that. Also, if you had an empty loft space and you went into that and put a couple of bedrooms in and an ensuite, that's not a rental deduction. It's not a repair. And most people get that wrong as well. Again, the property rental toolkit will cover you off on that though. The other thing people do is on the repairs, they try and put all kinds through. Or a lot of shops these days will have the last 4 digits of the bank card that you've paid on, etc. And apparently they have a field day. They caught one guy one day who they reckon must have just stood outside a B&Q and gathered receipts off people. And to believe his story, you'd have to believe that he spent like 10 grand within like a day using about 20 different bank cards, which of course is just ludicrous. But also, I'll come on to where repairs comes in again, but property numbers, your tax return asks you how many properties you have. It's got to match their list. If it doesn't, you need to say why it doesn't match their list. There's literally a question, how many properties are you declaring income for on this return? Don't miss it. That might be the thing that saves you when you come to the top of the pile. And apparently round sums are a great one as well. They love round sums. If every box on your return is a round sum, they pretty much know you've made it up. Might sound simple, but you've probably made it up. If your mortgage figures exactly a round sum, nearest to the, round it to nearest 100, you've probably made it up, especially if they all are. But quite important here is the ratios. They know roughly what a property should look like. They know, based on the area, the size and style of the property, they know roughly what it should look like across any 5-year window. They know what the repairs should look like. If you've got a downstairs Tyneside flat, other than your insurance is going to skyrocket, thanks Janet, that'll explain last year's renewals, will it? If you've got like a downstairs Tyneside flat and you've got £4,000 a year of repairs, they're going to want to know what's going on, aren't they? Now you might just be really unlucky like year after year, but it probably means you're standing outside a B&Q getting receipts off people, doesn't it? And on that, receipts, keep your receipts. If you've got a big cost, again, you can provide additional information on a tax return. If you've had a 20 grand refurb and it's all allowable, because it might not be disallowed as capital, depending on what the work was. If it obviously looks a bit funny because it's going to distort the ratios and make everything else look weird, don't forget you can always send in some information with your return. You'll have to type it up, save it as a PDF, and attach it when you submit, because it won't come through automatically. But just remember, you can do stuff like that. So if you've had a burnt out property and you've spent a bunch of money on repairs, getting it back ready, don't forget on that one, the insurance money you get is taxable, and then what you spend it on may or may not be an allowable expense. So you've got to report both sides of any transactions like that. But again, if you put that on, that'll explain why all of a sudden your rent goes from £5,000 a year to 30 grand with 30 grand's worth of expenses. You can just declare that. So I just thought that was quite worth going through. If you've got anything that makes you think maybe I need to do things a little bit different, come and see me at the end. But hopefully that was just of some interest. And good luck, everyone. Because HMRC have been pretty much absent for the last 2 years. I don't know if anyone's tried to speak to, well, basically anyone from the council, the planning office, the HMRC. I don't know where they've all been. But I've been assured that HMRC are all back at their desks as at the start of this month. I still haven't managed to find any on the phone, mind you, but apparently they're all back. So I'm sure we'll start to see more inquiries coming soon.